The market's been smashed. Time to avenge your portfolio. Hi everyone, I'm Marc Lichtenfeld, Chief Income Strategist with the Oxford Club. Welcome to State of the Market. According to a survey by Ally Financial, 1 in 5 investors have closed their investment accounts in the past year. The largest group closing their accounts, millennials and Gen Zers.
Bruh, seriously?
I get it. Investing hasn't been loads of fun in 2022, but investors who allow emotion to dictate their action always do the opposite of what is good for their portfolios. When markets are tanking, that is not the time to close your account. That's the time to add to your portfolio because stocks are cheaper. There's an expression: the stock market is the only market where when merchandise goes on sale, the customers run out of the store. This market is providing an opportunity for you to be a hero. First, you have a great opportunity to buy great stocks for a hell of a lot cheaper than you could have a few months ago. But what if it's not the bottom?
That, I can go lower.
Who cares? You're not going to pick the bottom, so don't try. But if there are great stocks at attractive valuations, you'd be crazy not to buy them now. Could they go lower? Sure, but they'll likely be higher in the not too distant future. If during the Great Recession, you bought stocks halfway through the bear market, meaning you still had to endure another 28% decline, you were made whole in about a year. And today you can find stocks like Pfizer trading for just 6 times earnings and yielding 3.5%, Chevron at 7 times earnings yielding 4%, and Altria Group at 8.5 times earnings with a 9% yield. So why wouldn't you take it? You know those valuations aren't going to last forever. A bear market gives investors an opportunity to significantly alter their family's financial future. Buying stocks for the long term when they're down, especially perpetual dividend raisers, means you can buy more shares, generate more income, and if you're reinvesting your dividends, compound your wealth faster. When you shop for big ticket items, you probably wait for sales.
They're arranged in order of price. The most expensive are in the front.
Well, there's a big 25% off sale in the market right now. You should be picking up some stocks now. You don't have to blow your entire cash stash at once. Pick up some stocks now. If we head lower, buy more. And always have some cash on the sidelines for great opportunities like we're in right now. That's one way to be a hero to your family. The other is to teach the millennials, the Gen Zers and younger, the power of investing for the long term and not getting shaken out by a bear market. Stocks go up in the long term. We know that they do. It is not different this time. There is no reason why a long-term portfolio shouldn't go up 10% to 12% per year on average. In fact, a 12% average annual total return is the goal of my book, Get Rich with Dividends, and the compound income portfolio in my Oxford Income Letter. 12% per year triples your money in 10 years and multiplies it by 10 times in 20. Show your family that your investing is not ruled by emotion and that when other people are panicking, you're buying their stocks on the cheap. It's not easy, but being a superhero rarely is. Just ask Spider-Man.
With great power comes great responsibility.
To help you get started, I've compiled everything you need to know about dividend investing into my Ultimate Dividend Package, and it's entirely free. Simply click on the link in the description below and enter your email address to claim your free Ultimate Dividend Package. Thanks for watching State of the Market. I'm Marc Lichtenfeld. I'll see you next time.